Hello, everyone. Welcome to the webinar today. My name is Alexandra Alvarado. I'm the Director of Marketing and Education at the American Apartment Owners Association. Very glad that you could make some time this December to our webinar. I know the holidays are a busy season, but it is also a great time to prepare for 2025, which is why you may have noticed we have a few webinars that are 2025 focused. And so if you're on this, you're really getting a head start, which is great. We're going to talk about some game-changing trends from none other than Grant from Revela. Grant is the founder and CEO of Revela. If you haven't heard of Revela yet, they are an all-in-one property management tech platform. They work with landlords of all sizes, which Grant and I were noting before this call started that, lots of variety in those of you who have registered. We have some with, 2,200 plus units and others with just one. So we're going to try to address really how these trends can apply to all of you, regardless of how big your management or your rental portfolio is. So a little more about Grant. He, while studying philosophy, politics, and economics at Brown University, he experienced firsthand the broken processes of property management during a 3-day heating outage at his apartment. His curiosity and audacity led to the inception of Revela, which has grown to manage now hundreds of thousands of assets and tens of billions of dollars in real estate. Grant and his team continue to expand Revela's capabilities and services, including accounting, client success support, lending solutions, as well as credit and banking innovations. So really here, being as innovative as possible in this industry, and we definitely need more of that. So for those of you that are coming in, I'd love it if you could put in the chat where you're coming in from, your city and state, just so we can get a feel of where you are. And Grant himself is from Michigan. I'm in California, in Calabasas area, so if you're familiar with that. And, I'd love to just see where you're all coming from and give you a nice welcome. A couple other things before we begin. While you do that, we are recording this whole thing and we will be sharing it with you tomorrow in the follow-up email. We'll also provide you the PowerPoint slides. So just in case you miss anything, don't worry, you're going to get that. You can print it out, take notes after. And we'll also provide you with Revela's contact information, grants information. So if you do want to connect or learn more about Revela, you'll have that link in that email to do that. So with all that being said, Grant, thank you so much for joining. We are really happy to have you, and thanks for taking time out of your busy day.
Well, thank you, Alexandra. I'm excited to meet everyone here and to hopefully answer some great questions later on and to dig into, what we can do in 2025 to really get out of the operational doldrums that I'm sure many of you on this call have experienced over the last year. Getting into the presentation, because I don't like to waste time, I love saying the quiet part out loud that, it's never been harder to be a landlord, a property manager, a real estate investor, really anyone that's in this business that we're all in. You've had, inflation and increasing OpEx across the board. I mean, we did an internal kind of data analysis of the same property with the same maintenance issues 3 years ago versus, today. And we saw on average across geographies a 25 to 30% increase in the cost of just labor and materials, right? You have high asset prices coupled with, high mortgage rates. You've got a consumer credit crunch. So, your renters are more cash strapped than they've ever been, so they can't absorb, more of those cost increases through rent increases. And we've had, what is effectively a property insurance premium crisis at this point. We'll get into that in a few slides, but I've got some crazy stories from over the last couple of years that, influenced our strategy quite a bit as we've launched our embedded insurance products. And I've really explored the levers through which operators and we as a software company can pull to, optimize some of those cost centers. So if it's been hard over the last year, all that's to say, right? If it's been hard over the last year, you're certainly not alone. And all of us kind of on the tech side over here at Revela have been, thinking about how do we help, our customers really navigate through these really tumultuous waters, and come out on the other side better, faster, stronger, and making more money. So Outside of my background, Revela is, as Alexandra mentioned, a next-gen property management platform. I started the company in 2014 out of that same college apartment that I lost my heat in. Our story is a little bit different than most tech companies or venture-backed tech companies in that we bootstrapped our business, meaning we didn't raise outside capital until last year. So we spent the first 9.5 years of the business really getting in with early customers, being boots on the ground, learning kind of what operators go through on a day-to-day basis, and then really building the product footprint of what we have today based on that kind of constant feedback loop. So, as I mentioned last year, we raised $21 million of investment from some of the logos there. We do own a commercial mortgage brokerage and a commercial insurance company, which explains why Rocket Mortgage and Assurant kind of both jumped in on the cap table. And then we manage currently over 250,000 units, all residential, commercial, single family, multifamily. I mean, you name it, we've got exposure to it. Probably the weirdest one is we manage most of the off-campus real estate and all of the on-campus dorms for Brown University, my alma mater. It was actually my first customer, so I guilted them into doing business with us years ago, and they're still a customer today. So if they're here, shout out to Brown. Um, you know, One thing we're really obsessed with over at Revela is, going beyond software. And the question that we've kind of posited to our team of engineers, our client success folks, and really everybody is, what can our customers' data do for them? A lot of systems can store data, they can show you a report, but what does that data actually do for you? So the five pillars of our business are really finding new opportunities, financing those opportunities, ensuring those opportunities, managing them through the software processes that we have, and then seeking to optimize them by introducing some of the programs that we'll talk about later to get costs down and really drive, resident satisfaction and, improve kind of life for you guys as landlords. So today's agenda, to jump into it, is really to discuss first why unlocking 2025 matters. And we've spoken to that a little bit. I mean, it's been challenging. And if anyone on this call has had it easy, good. You bought some stuff really well, I hope, and it's still performing well. But for most of our customer base and most of the folks that we're talking to out in the market, it's been incredibly challenging to maintain margins and, kind of keep everything moving in the way that it was in sort of the mid 2010s or even kind of earlier than that. Our first really big topic and meaty topic is, mitigating the property insurance premium increases that I'm sure many of you have seen. There are some strategies we'll discuss today for, helping to reduce those costs by 10 to 15% over time. Talking through acquisitions next year, we'll see interest rate decreases, and there's been some asset price softening that we're noticing, which we can chat through a little bit as well. And then strategies for harnessing the power of your data. What types of things can you do? What types of processes can you automate to really give yourself a competitive edge operationally? And then we'll discuss, key takeaways, turning ideas into action. And then I'm happy to answer any and all questions as it pertains to what we do, what we're seeing in the market, how certain things work, and, really anything at all. I love the real estate space. I'm truly a student of the game. I own some assets of my own on the side of all of this stuff. And it's really become a passion of mine to get into the nitty-gritty details and talk about deals and, really just engage with the community more broadly. So to get started, don't just adapt to change, capitalize on it. So really getting into the meat of our presentation here, talking about renters insurance premiums, or sorry, not renters insurance, but property insurance premiums. Really this whole talk track and why we've invested so much time, effort, and energy over the last year and launching our embedded insurance products came from one customer experience that we had. It was a multifamily property out of Houston. So for everybody in Houston, hopefully this wasn't the case for y'all, Texas y'all. But we had one customer who they were a syndicator, they were self-managing, and they had a 400% year-over-year increase in their property premiums with no claims, And the carrier was just like, take it or leave it. They shopped it around, and really there was no better option. And they actually had to capital call their investors, raise additional equity to pay an insurance bill, which that operationally is not sustainable at all. And there's really no end in sight to that. I mean, you see stories every day of, carriers leaving particular states. I'm sure all of you and those in Florida have seen kind of the state-sponsored captive due to storms and changing weather patterns and all of the things that they use to justify these types of price increases. Insurance is really a mess for folks that own physical assets right now, and that's led us to take the position that premiums are out of control. And step two of that is what can you do proactively to kind of solve for that. The best solution we've found over the last year is implementing what's called a forced place renters insurance and tenant liability program. So, on average, we've seen across our portfolio, beyond those sort of outlier examples, an increase of 30% in property premiums. And in some cases, in cities like Detroit, St. Louis, Toledo, more secondary or tertiary markets, some insurance carriers are actually mandating that you force place renters insurance. So the impact of doing this is really that, manual tracking of policies does lead to errors. And if you have a situation where, a tenant perhaps, shows you a property policy and then, you have it, you put it in the filing cabinet, kind of scuttled away. There's a 40% chance, well, 40% of tenants that do that actually cancel the policy the next day, right? Which is not good. So if they have an issue, and another real war story from here in Detroit actually was we had somebody who did exactly that. They got the policy to move into the building. They were an international student at Wayne State University, which is actually right behind our office here in Detroit, and they installed an aftermarket bidet like on the toilet, and left for a weekend trip. And then all of a sudden the bidet started leaking and it actually, leaked through 4 floors of the building. So it was a 10-story apartment building and it leaked through all of the apartments all the way down. It was $280,000 in damage, and there was no insurance policy behind it. So the resident actually fled the country to avoid paying the debt. And, that particular customer had to, make a very, very large claim on their property policy, which when you do that, obviously will increase your premium rate. Automating a forced placement program. We do this in Revela and for every net new customer. What that means is when somebody moves in, asking for proof that they've bought an insurance policy or selling them an insurance policy through whatever your technology stack is at that point. The key part of that to really get right is adding your management company or you as an interested party, is what they call it, on the insurance policy. So if they happen to cancel it, you get notified immediately when they do so. So then what do you do next? You call the tenant and say, hey, like, I see that you canceled this policy. You need this as part of your lease to occupy the unit. You could do that, but the other option is to explore what's called a tenant liability program. So this is an insurance-like product. We offer it through Revela, and you can get it from many different sources. But all it does is indemnify the property against any tenant-caused damages. So the important part of renters insurance for you all as landlords and property managers is that you have, whether it's 100,000, 300,000, $500,000 in indemnified damages from the tenant, which could be from fires, explosions is always the weird one in there because I'm sure that came from some crazy experience that the underwriters chose to include, floods, all of that type of stuff that a tenant does to damage your property. It covers you against that. So the way that math breaks down for the insurance carriers themselves is roughly 90% of all damage is tenant caused. So when you have 100% compliance with either renter's insurance or this tenant liability program, you're eliminating 90% of what you could potentially make a claim on, right? And that necessarily de-risks your asset in the broader pool of assets for that carrier, which is kind of where you see those 10 to 15% decreases in property premiums over time. Now, to activate that, you have to be able to report on those things, which I'm showing a little snippet of our reporting from Revela over here, which shows, asset by asset, like here's all of the insurance policies. We tend to sell them and add ourselves as Revela, the software company, as an interested party to help our customers track and manage this process, just because, the USPS, I'm not sure if any of you guys rely on checks in the mail for rent. If you do, we're happy to help you get payment processing set up to accept rents online. But we get some checks from customers that refuse to enter the digital age here at the office, and sometimes it can take weeks for them to get here, and that might just be a Detroit thing. I don't know. Detroit certainly has its operational challenges at times, but you can't really rely on the standard means of communication, and you have to sort of blanket cover all your bases so that you're ensuring that critical information gets to where it needs to. So action steps from here that you can take to start running a forced placement renters insurance policy or program. You need to update your lease agreements to have that stipulation in the lease. So it's a requirement for renters insurance of a particular amount. Usually $100,000 is the standard. You'll want to accept what's called the certificate of insurance or evidence of insurance that will have the producer on it, which was the insurance agent that they bought it through. In our case, if you buy it through Revela, we know that because it's Assurant, who's one of our investors. And then having a secondary portion of that clause in your lease that says, hey, and if you don't, maintain compliance with this insurance policy, if you stop paying, you'll automatically be enrolled into a tenant liability program. The way that we facilitate that on our side is we'll actually, just bill it in addition to rent as part of that lease. And so it just gets added to their tenant ledger every month. And, as long as you're paying that policy, the tenant has full coverage and you'll see some of those savings begin to materialize downstream. And then lastly, I'd say too, like beyond just the forced placement tenant program, one other best practice that, we've found is for the multifamily owners here in particular, the largest cause of apartment fires is typically lint buildup in bathroom fans, right? We've encouraged some customers to, using our inspections app, go and do quarterly inspections on all of their units and show that each of those bathroom fans on a unit by unit basis have been cleaned out and that risk has also been mitigated. What we tend to do is then package all of those inspection results, the reports about tenant insurance compliance, all of the certs, and then hand those to the property policy carriers or brokers or whoever you happen to use. I mean, we own an insurance brokerage, so we walk down the hall and hand it to our producers, and that's what's used basically as the evidence for justifying reductions in premiums to the carriers over time. Now, you're covering all your bases and you're giving your insurance broker or producer all of the ammunition they need to go to bat for you to save you money. So moving into our next talking point, and I'm happy to, revisit any of this stuff at the end of the presentation, but I'll get through all of this stuff and then we can kind of do open discussion. We see a real future for acquisition growth with lower interest rates and the softening of, certain asset prices across the country. Now, not every market's equal, and you may still see some places where, you're not seeing that softening yet, but the Fed is projecting that interest rates are going to decline by mid 2025. And while asset prices are still high, many syndicators are struggling right now. We have a lot of customers that are real estate syndicators, or we have management companies we work with that manage for syndicators, and they are kind of the biggest embedded flight risk within their managed portfolio. And one of the leading indicators of a deal that's kind of falling apart is over a 2-year period, how many times have you switched management companies? It may not be the management company. It may just be the principles of the deal, which makes sense. I mean, going back to what we discussed at the beginning of the presentation, it's a really difficult time to operate these assets. And, one of the old truisms of real estate is you always make money on the buy. And a lot of people over the last, 5 years have bought assets that, were either troubled or they didn't do a good job underwriting, or, debt was really cheap and they had adjustable rate mortgages and those adjusted up and there hasn't been relief there. So if that's happened to any of you, it happens and it's nothing to be ashamed of. It's just one of those realities of being in the space, and not every deal is a good deal. And so, yeah, so what do you do? For those of you that aren't in that situation, it's pretty much going to be time to buy toward the back half of next year. There will be assets coming to market that have to get liquidated. And so, what can you do to kind of get yourself set up and ready to do that? If any of you have long-term investments that have appreciated, because asset prices are so high right now, and when inventory floods the market, they will soften as well. Now's the time to really start exploring options for a cash out refi. The proceeds from a cash out refi typically, depending on the situation, tax-free. And you can hold on to those funds for as long as you want as dry powder to get ready for the next cycle of buying, which is going to really begin probably midway through next year and continue on through 2026. Deals will be available, and investors really need to be ready to transact. So, what can we do to get ready for that? We talked about cash out refis, also establishing, what you'd like to buy, or what, as we call it internally, a buy box, right? What are the criteria so that you can make a quick decision through an underwriting process to onboard a new asset, right? And also, establishing relationships with, mortgage servicers. They'll tell you which deals are in distress. I mean, we work with several of them right now. And there's about $300 million worth of NPLs, or what are called non-performing loans, coming to market to be sold from the banks that hold them right now to really anybody that wants to buy them and foreclose on the assets, right? That's a scary number, but ultimately it's a byproduct of the environment. And knowing a mortgage servicer or those mortgage adjacent companies can help you get a leg up in your particular market in terms of finding access to deal flow. And then mortgage originators. So having a great mortgage broker is always a good thing to have. Regional banks and local banks are still pretty tight on commercial mortgage-backed securities. So they haven't loosened up because of what they perceive to be risk in the system. But luckily, there are a bunch of private, mortgage lenders out there that have basically equivalent terms to most of those folks that are more than happy to, throw a term sheet out and provide terms for, 30-year debt on what's called a debt service coverage ratio loan. So, we see all that activity increasing. I mean, during 2022 and 2023, about 80% of our mortgage business was, bridge loans for, flipping properties or rehabbing properties. And that's starting to shift now. So it's more 60-40, and we anticipate by the middle of next year, we'll be mostly into term debt, which is where we were back in 2021 when we started that practice. Um, Moving into our third talk track, harnessing the power of your data. I mean, we talked about it earlier, but OpEx is increasing faster than rent growth, right? Consumers are cash strapped and can't really absorb any more cost on their side. One thing we've done that's been particularly effective over the last year is introduced an AI-powered collections feature within our platform. This is sort of how you should think about these processes. Usually collections is a very manual. I have to generate the state-specific form and then call the tenant, then text the tenant, and really get into this whole back and forth, which is unpleasant for all parties. What our service does that we've embedded into our platform is calls, texts, emails, and sends threatening letters in the mail to anybody that owes you money totally automatically, which can reduce headcount and actually increase, your rental collection rate or your economic occupancy of your assets, right? It's not about how much money you bill, it's about how much money you collect. And this is just one of those little things that, can really help unlock your properties into the future. So what you can do really to harness the power of your data is get it all in one place, right? If you're not using any type of system, there are plenty out there that can help you centralize your data. Really getting into a good reporting cadence. So understanding what do I want to look at from both the KPIs and month-end perspective, and getting really rigorous around the pipelines of data that are built. For those of you that are using an external, property management software or a tech stack, really expect more from your technology partners and ask the questions around how do I get more of my data out of the system so that I can, action on it. And then really seek to enhance transparency. If you have opaque processes or you have, opaque buckets of data storage, you'll never really be able to draw the correlations between what happens over here to the result over here. And it's really then challenging to get out of an operational challenge when you can't kind of couple things together or really understand, which levers can be pulled where in order to optimize a cost center. So the mandate here is to unlock 2025. We just talked about three ways of kind of getting you there over time. We're always happy to explore other ones or, share any other learnings we have out in the market. Action steps from here are, choose one of these strategies or all three of these strategies and commit to implementing it in the next 30 days, right? The end of the year is coming and you want to get off to the races in 2025. So if there's any way that, we can help, we're always happy to, pick up the phone chat. If you want to, discuss how we can operationalize these things quickly in Revela, we're happy to talk about that. Or honestly, just share best practices. We're all in this together as real estate investors, as landlords, as participants in the market. And I think the more collaboration we can all have in the market and the more knowledge share we can all do together really leads to better results on the net. Um, so for those of you that do want to discuss kind of next steps, you know, what holds you back from trying new technology, if it's implementation related or expensive transitions, or you're just happy with where you're at, ask the questions, right? Whether it's us or somebody else, you should always be shopping and always seeing what's out there. And yeah, I think 2025 is going to be a very transformational year for the market. And at the end of the day, we're here as a participant in that entire flow to help people get, what they want out of their investments. We always joke internally that our goal is to make the underwriting spreadsheet come true for any real estate investor. So I think start thinking like an investor. If you're a manager, if you're a landlord, even if you are an investor, everything is kind of moving up market to the asset management view. And the more that you can kind of think about the business in that way, I think the better you'll do, and the better you'll be able to understand the entire machine of how everything kind of functions and works together. So with that, I am happy to answer any and all questions about anything we've discussed or, discuss life, liberty, and the pursuit of happiness. It's totally up to you guys.
All right, great. Well, let's get that going. Lots of action happening in the chat. Also, Q&A box, guys, for questions is a little better because I don't want to miss anything. So that's a separate little icon with a question to put the questions in there. I'm also going to launch a poll question about this free white paper. If you'd like to receive a copy of Grant's free white paper called Addressing the Surge of Renter Fraud in Multifamily Housing, it's going to basically go over safeguarding your rental income, a little bit more detail, and protect you from those negative financial implications of renter fraud. So if you say yes, I will get your email and send that to Grant and his team to email you that free white paper. So highly suggest that. It's a great piece of information for you all. Let me go through the questions that we've gotten so far. So a couple people saying to send Grant's contact information. So just as a reminder, we did record this, and tomorrow I will be sending the recording as well as Grant's information and the slides. So you'll be able to contact Grant and the Revela team if you do want to ask any further questions as well. David was asking, can you integrate marketing to tenants, collect rents, market for deals, CRM to follow up in your system? So a few different features there. Grant, any comment on that?
Yeah, so Revela syndicates through the Zillow network, the Realtor.com network, and the Apartments.com and Apartment List networks. They're all actually the same, like outbound API integration, but the way it works is you set up a listing in our system, add photos, videos, virtual tours. If you use a remote showing service like a Show Mojo or a Rently or a Tenant Turner. We have integrations with most, if not all of those. There's always new ones popping up. It seems like every conference I go to, there's 55 new tech vendors that do something similar to everybody else. So it's hard to keep up with the integration flow. But yeah, so we syndicate listings out with those integrations. Applicants or interested prospects basically fill out the form on a Zillow, a Trulia, whatever it happens to be. That gets processed into our system, and all of those entrants are entered as prospects. And so they'll have a contact. You can email and text them out of the system. We do have custom templates, so you can, customize your follow-ups, add links to applications, all that good stuff. We do some listed properties for sale. So we have a sourcing function, which is basically an on and off marketplace. It's primarily for single family homes and small multifamily properties that you can, if you're a management company, internally list properties that you're already managing to other investors. So we always love when doors stay within one management company in the Revela universe. But yes, we facilitate all of those things. What I'd say we don't do is like a full kind of owner lead tracking CRM type thing. There's a ton of great solutions out there for that we do integrate with. The biggest companies we work with use like Salesforce or Zoho or things like that to manage their deal processes. But yeah, great question, and thank you for that.
Great. And I might have missed that. Do you also do the online rent collection process as well?
Oh yeah, yeah. Rent payments are kind of a table stakes at this point. So
Yeah, I think really, if any of you on this call are still using Venmo or Zelle to process your rental payments, I would highly suggest that you use a platform that is actually meant for collecting rent. It's going to make it a lot easier, especially with some of the new tax laws coming about with using those platforms of like Venmo and Zelle. You're better off using a platform that does do it specifically for renting. So, Revela and really any software nowadays does that. So, definitely, if you're not doing it, look into it.
and the
Also,
thing about
yeah.
that, I'd add to like find a software partner that has as many available ways to pay as possible. I mean, we do
Mm,
ACH, we do credit card. We have an integration with a company called Green Dot that allows people to go to a 7-Eleven or a Walmart, and instead of bringing you a money order, they can make an electronic transaction there by turning cash into an ACH through that service. Really, like during COVID, it became imperative that you just have as many channels of getting money into the business from a rent collection perspective as possible. So make sure you ask those questions of your software providers.
Yeah, absolutely. And I'll add on to that as well, that it also makes it easy to keep track of late fees, sending reminders, auto pay, which we love. So all those things definitely would look into those features. PV Realty and Kevin both asking, how much does your system cost?
The $1 million question. And the good news, it's not $1 million. So our pricing packages start typically at $3 per unit per month for a pro plan. We would recommend that because it comes with a lot of the embedded automations and access to programs that we discussed in this presentation. We do have an enterprise plan that starts at $5 per unit per month, which gives you access to our data and reporting API. So for anyone that is dealing with, pension funds or publicly traded companies, they're kind of the worst, but we also love them because they're usually pretty big, but they have really specific reporting requirements, which that higher tier of our license helps cover. So yeah, starts at $2 per unit. Really, most people fall into that $3 per unit per month tier. And then we have a lot of embedded, revenue generating programs. So going beyond, what the software system costs, what we're obsessed with internally is how do we make this a revenue center for you. So as an example, through the forced placed renters insurance program we talked about, we actually pay marketing fees to our customers for every renters insurance policy we sell,
Hmm,
right? And if we're doing a tenant liability program, which, isn't a regulated insurance product, there is usually some amount of money that goes to the property manager or the landlord on a monthly basis. That's part of that premium as a revenue share. So really we try to again go beyond just like a hey, we're a vendor or a service provider to hey, we want to build out this operating flow for you that makes sense, puts money back in your pocket. And if we can make Revela effectively cost nothing by driving additional value to you or increasing revenue streams or unlocking the ability for you to make money in different ways, that is 100% what we want to do.
absolutely. I like that. David wanted some clarification on what is a unit cost. Please give example.
Unit is
Like a
segment of
door
yeah,
or
door. Yeah, it's just and it could be 10,000 square feet. It could be 100 square feet. It's just whatever the measurable tracking metric is for a lease is on this thing and it exists. It's a physical space that can be leased.
okay. So you're basically paying for each one of those, which is great because I know we have a lot of you all on the call that don't have a lot of units, and so that's obviously not going to be as burdensome. It makes sense. And then D. Milton, I think you already covered this of whether you market or offer listings of available properties or investing opportunities, but I'd like to see if you could also give a little more information about some of the investing side of what Revela does.
Yeah, and admittedly, we kind of feel internally like we're cavemen discovering fire with that right now. There's a lot we're planning on investing on operationalizing around that function next year. But we do have an online offline property marketplace. It does allow you to enter kind of investment criteria and areas that you're interested in. And it allows you to create lists of assets that you want to purchase. And what we normally do is we send those lists of assets to a property manager or to a realtor that's in our network. You can also take it yourself and start busting down doors, but it's really the sourcing function now. Is finding assets that are of interest to you that fit within a certain criteria. And then we try to connect you with our mortgage company to get you initial terms so that you're, ready to basically press go on purchase if everything comes back from the inspection as copacetic. So I hope that answers the question. If you want more clarification, I'm happy to dig into it more, but
Great. Yeah, and I definitely think that answers it for me at least. And also too, I wanted to ask you about you mentioned other ways to generate revenue. And so I know utility costs or cable, that kind of thing. I just wanted to pick your brain, Grant, as to how you might be seeing that integrated into the properties that y'all manage.
yeah, utilities are a weird one because it's so state specific. So, what we always recommend is if you're in a deregulated state and you're operating, multifamily properties where there's some amount of scale within the deal in terms of either a master meter or sub meters or whatever, go find the local utility providers. I mean, we have a group purchasing organization that we work with nationally that I'm happy to introduce you guys to, whether you work with us or not, that, does utilities consulting in states where they can, which, if you can negotiate a better rate to buy natural gas, for example, that's just savings on the L side of the P&L that, help, reinforce NOI, right? With cable contracts, I think the allure of those initially, when Comcast comes to you, if you own a really big multifamily property and they're like, we'll pay you 69 grand for exclusive access to market to your tenants, like that feels really good at the time, but then you're locked into that for a very long-term period. So there's actually a lot of companies that are innovating in that space right now. Again, that I'm happy to introduce anyone to. We partner with a few of them right now, just in terms of activations. The big one that's interesting right now is we have a partner, and they're pretty early, and so we're still in the beta phases of kind of rolling this out. But they're actually doing managed internet services for single family rentals. So it's the first time anyone's ever tried to do that, and it does allow you to monetize Wi-Fi as a real estate investor or a landlord. So those things are coming. Again, it's one of those things that I think real estate's a 100-year business, and as a technology that's trying to service that market, we have to have the same sort of mindset, right? Of building for the future. You don't want to introduce too much very brand new tech too early before regulators have a chance to catch up with it. But we're excited about what we're seeing in that realm for sure.
Yeah, that's great. Very exciting. And Natalia asking, how long has your company operated in this business? So kind of playing off that, when did Revela start?
2014. So my initial angel investor called the first 10 years of any business the decade of misery, where you're still learning and trying to figure everything out, building, and you're really looking for that kind of unicorn of product market fit. We hit it a little bit earlier than that. Really back in 2021 was the big unlock here for us. But yeah, we've been around for about 10 and a half years at this point, and looking forward to the next 50.
I love that. Esvin is asking, with communicating with tenants as a property manager, what is Revela's communication system like?
It's a great question. In the same way that you want to have as many ways to collect money from your residents, you also want to have as many ways to contact them as humanly possible. So within Revela, we have built-in two-way email sync, so emailing tenants out of the system either automatically or manually as an end user. All of those responses get logged back into the system. We can also do group emails. We have embedded text messaging, so same type of thing there, as well as group text messaging. One trick with that, there are services out there that allow you to kind of do that. I'd be careful though, because the regulations around that changed with marketing text messages versus transactional text messages that you send in bulk. If you're found to be sending marketing text messages in bulk, that's a violation of the updated, whatever legislation it is. It's hard to keep up with all of this stuff. Um, but yeah, so what we do typically is during the application process, when somebody's filling out a rental app, we'll have them acknowledge and accept that they can receive text messages from the management company or the landlord or whoever our customer is or us. And then we have them reaffirm that once they become a resident as well. So when they log into their tenant portal for the first time, there's a few disclosures. They fill out a move-in inspection, and then they, sign and acknowledge that they can accept communications from us through that channel. We also have built-in phone. So we're doing another integration right now with this company called Open Phone, which is pretty cool. So it allows, you to provision phone numbers. You can have as many of them as you want with different properties, et cetera. And it basically keeps everything in one, consolidated, inbox. So those are really, I think, the main three ways that we communicate. We do have internal messaging, and we have kind of a built-in chat feature so you can, talk to your coworkers and send GIFs and memes or whatever you want back and forth, or, cool YouTube videos or music. And, hopefully people aren't doing that. I don't think they are, but anything's possible.
Well, yeah, and I think that's actually a good point as to, having the ability to put everything into one place because if you are using your personal phone and text, and then maybe later, hopefully not, you get some sort of lawsuit of some sort, you need to go back and find out every time you've spoken to this tenant and to every text. It's just nice to have it in one place so that you can take notes and also just have a record of when you spoke to that person without having to dig through your phone bill. So always helpful.
And
And
it really helps with
mhm.
evictions as well. I mean, just
Ooh,
having
yeah.
log, and we have a download eviction packet feature actually that takes all of the call records, histories, lengths, durations, texts, emails, and basically, dumps it into a giant PDF that you can send to your attorney. And, it might just be like a presentation thing, but when an evictions court judge sees like, that much evidence printed out, it's like, okay, like they really tried to like make this right, and I'm not going to get in the way of this eviction.
I love that. It's funny because I was thinking actually like it'd be great to just be able to export that, but you obviously can and make it really easy. So that's great. And then also a couple more questions. So David is saying you mentioned renters insurance mandate. Please expand on some success ideas for insurance to pay for damages.
Okay. So I think part of that, and getting at the heart of your question, it sounds like you had a situation where you tried to make a claim on someone's renter's insurance, and it went awry. That can certainly happen. I think step one is making sure that you have the policy itself and that you have standards around the policy that are basically enforceable. So one thing we do, as an example, is the assurance policy that we sell through our platform has very specific terms and stipulations associated with it of what's covered and what's not covered. And thankfully, Assurant puts all that on their website, so it's super easy, and they provide examples and all of those things, right? You want to make sure whatever policy that you're being presented covers all of those things and listing out all, and we're happy, we help customers with this all the time in terms of setting what those standards are, but you want to make sure that it's inclusive of, everything that possibly could happen. So if you cover everything except explosions and there's an explosion, the carrier is not gonna pay, right? Same thing with the damage liability waiver that we talked about as sort of a compliance check for that. You want to make sure whoever you get that from is including all of the different coverages that, are relevant to your situation. And so in some cases, you don't need, lava insurance on a renter's policy if you're not in Hawaii, right? Like that's just silly. So some of it comes down to geography. But you want to make sure, for example, if you're in Florida or a low-lying area, or if your property's on a floodplain, that, water damage is included in that. And that if some storm comes along and, breaks it causes the tenant's car to crash into something or whatever, that those different coverages are included within your policy. So you have to look at each policy individually. I mean, we do that as part of our service. So we'll look through the individual policies. If it doesn't pass muster, we notify the tenant and we notify you. And then they can either be automatically enrolled in that damage waiver product, which does meet the standards that we've kind of co-established, or they can purchase the Assurant policy through us that has that, or go back to State Farm and say, hey, I need XYZ additional coverages to make sure I'm compliant with the terms outlined in the lease. But we typically just provide an addendum that Assurant gave us to everybody that, lists all of that stuff. And that's what sets the standard when people work with us as a software provider.
Mm, okay. Also, R. Thomas, does Revela cover all states?
From which perspective? We're in 47 states right now.
Well,
From
for insurance versus, I know some states is you have to get like every state approved, right? So,
Yes, so our brokerage is approved in all 50 states.
nice.
And we use Assurant typically as a fronting carrier for that, and they're a massive insurance company. So that's where most of the sort of compliance piece happens there. The other side of that is on the mortgage side. We cannot originate in three states. It's like Wyoming, Utah, and I think New Hampshire, maybe, because they don't really like commercial mortgage brokers there.
Hmm.
Most go through a resi process or some kind of out of band thing, but yeah, all 47 of the rest of the states not there. We have coverage in from a mortgage perspective as well.
Great. Gina is asking, what is the monthly amount tenants in California would typically pay for renter's insurance with Assurant?
It entirely depends on, where they are and how risky, the Assurant underwriting algorithm considers those areas to be. I've seen anywhere from, $350 annually to $500 annually, depending on, certain, contents coverages or things like that. And a lot of it too comes down to the value of the asset. Generally speaking, that $100,000 in liability sounds really good if you're in a place like where I am in Detroit, where most assets are less valuable than that. But in California, you may be renting a $600,000 house and you may need more coverage. So every incremental, increase to the amount of liability coverage will increase the premium the tenant pays. But it's usually not that material. It's usually another, $50 annually, right? Per $100,000 in coverage. So hope that answers your question, but happy to, number one, put you in touch with them, or if you decide that you want to work with us on that side of things to figure out the right mix there. The better product, honestly, may be the tenant liability product because you're stripping out a lot of the contents coverage, and that allows you to keep the cost comparatively lower. So.
Yeah, and just as an aside, when I was a renter, I had Assurant, and my property management company required it, and I had to select if I wanted to opt in to increase the coverage. So the base rate was really inexpensive. It was like $15 a month. I'm in California, but it was like a two-bedroom apartment a few years ago. So, that gives you some idea. And then I bumped it up a little just in case, because I thought having a little more coverage would be good. But it's nice because the tenant could have the option to do that if they want to. And ultimately, I mean, I think in any case, as you mentioned, it's pretty inexpensive, even if you do have, a rental that is in higher liability, it's still pretty affordable for the renter. Gina says, thank you both for this information. My question has been answered. You're welcome, Gina. Um, Another question here. I'm going to go over to the Q&A, see what we got here. Um, Nataya asking, does renter's insurance cover the damages the tenants left behind after they have been evicted?
It tends to not. That would typically fall within a security deposit program or a security deposit insurance program.
Hmm.
Now you can on your property policy actually get what's called, vacancy loss coverage, which can pay you for, time that your unit is down. And there's also other insurance products that again are coming to market that, are related to rent loss. So basically the way that some of those work is you basically give up 1 month's rent to get the other 11 months guaranteed, right? Again, it's an insurance product, so the 1 month's rent is the premium to kind of run that program, and that doesn't work for, I'd say probably 75% of deals that at least we see. but it's an option that's out there. So yeah, for renters insurance, I mean, if you're evicting somebody, chances are they're not paying that bill either. So it's probably a lost cause, unless, the landlord is continuing to absorb the cost of the tenant liability waiver, which they have the option to do. We give them the option to do that, just to have that extra kind of insulated coverage on top of the property policy. So if the tenant does decide they want to trash the house on the way out, and the landlord still has that tenant liability coverage line there that they've been paying into. We've seen some people, I mean, probably 60 or 70% of the time, make claims that actually do get paid out for resident caused damages on the way out, right? It should be intentional though. That's the one caveat, right? So if somebody, takes a baseball bat and starts just like whacking away at the drywall, that won't be covered. But if they accidentally, fall down the stairs while they're moving their stuff out and crash into the drywall, there's an argument to be made that that will be covered.
That's a good point. And Natalia, I put in there the names of two companies that do have the sort of, it's not renter's insurance, it's like you said, security deposit or release insurance. And that's the Guarantors, which is one of the companies that does work with AAA members and lease guarantee. However, you do need to get it beforehand. So before the lease is signed, you would need to have that paid up front, and either you can pay for it or the tenant can pay for it. But essentially, when the tenant does have, the issue of damage, or even if you have to evict them and you have rental loss, you can file a claim. But yeah, Grant's right. It's usually about 1 to 2 months of cost of the rent up front, and it's not really a security deposit because it's not refundable to the tenant, but it can cover you in those worst case scenarios. And I know a lot of companies are starting to use those just because, you never know what can happen, even if you have a good tenant on paper. Um, okay, so a couple other questions here. Esvin, going back to the communications platform, you mentioned that you can have your own phone number, right, within the platform. Can each team member have a separate number so they can communicate with tenants and owners?
Yeah, currently today it's a shared number, but once we finalize that open phone integration, which should be in Q1 of next year, it does have the capacity to do extension handling. So it can still come from, one address, but it'll have kind of the, dash at the end, 123, which allows us to tie it back to the user. So if somebody is already today communicating out of Revela via text, it'll tell you which user sent that text message, which is how we kind of show the difference between team members and system generated messages, et cetera, et cetera. But yeah, we're excited about Open Phone because it gives us a lot more kind of VoIP and telephony functionality that I think is, really relevant in today's digital age of consolidating communications and making it really easy to know, who contacted who and when.
Yes, definitely resolves a lot of confusion. Also, Natalia asking, do you have a recommended collection agency?
Man, that's a really good question. I'd say it really depends on where you are. There are the big national players that are out there that I'm sure all of you have heard of and worked with. I won't name names, but your best bet is typically finding somebody local who does that. One of my favorite collections agencies that we use here in Michigan for our customers here in Michigan is a company called Presti Collections. And this guy's great. He's an Italian guy. He actually lives across the bridge over in Canada, and he's so crazy that he actually camps outside of the Secretary of State before tax refunds are issued, so he can garnish them right away. So we've usually found the best results with local guys like that really kind of care and get in the weeds and don't kind of just like take the debt and then hope for the best and send some emails. You want real boots on the ground depending on where you are, and there's tons of companies out there that are like that. So I'd say going beyond the standard issue national collections players, go out to any attorney that you work with. I'm sure they have a collections guy that works. Any auto dealer that you have will have a more local collections guy, and they'll also know kind of the how the municipality works, et cetera, et cetera. So that'd be my recommendation there.
Great, thank you. And Esvin is asking, could you please elaborate on the autom automation your software offers for notices to tenants, such as rent increases and other changes of terms?
Yeah. So, I mean, we're always working towards a more perfect union in communications about rental increases. It's actually kind of it's a difficult thing to manage because a lot of decisions have to be made in advance of deciding there's an increase or communicating the increase. You have to decide how much. And, one scheme we've seen be successful is using market-based data to really get a beat on, what market rent is for that asset. And if you're within, a standard deviation of the mean of market price, I would say go ahead and increase. Maybe stay put for now because of consumers being cash strapped, but that's the pricing component. When we are ready for renewal offers, we send them through the resident portal via email, and then if we don't hear back from them via text message, at that point, the resident is basically given the option of increasing or accepting the increased rate, moving to month, which would add, a fee that's usually higher than the increased rate. So the calculus there is if you're going from, $1,500 a month to $1,550 a month, you want to make the month fee $100. So it'd be $1,600 if they don't commit to the longer term, which gives you more security as the landlord, right? So that's one tip and one thing we, automate through the process. We then have them sign an addendum through the system. So we built our own version of DocuSign internally. On the flip side of that, if they stop paying, the collections process we have is, you basically find all the tenants that, owe you money. You select them all, you hit demand letters, and we've configured, all 50 states, state-specific demand for
Mhm.
non-payment of rent letters, and then the days behind the scene of like what the cure period is. So for example, in Michigan, we have a 7-day demand period. So from the time that you send the notice, to the time that the tenant, moves to the next step, which is the notice to quit and you start an eviction, they have 7 days to figure it out, right? Oh, it was 3 days. I think, other states are between 3 and 10 days. Some are same day. I think it's Arkansas that's known as being the most tenant unfriendly state in the country. And I think it's like instant if you don't pay, you can be evicted immediately.
Mhm.
So, and from there, you can make the decision. Do we want to put them back into the collections process? Do we want to actually move forward with an eviction? And then they go into the evictions workflow, which, but the other critical piece there is when you do send somebody that, official legal notice, you need to make sure that your software platform isn't allowing any additional payments after that point. Because if you go to a judge with a demand for non-payment of rent letter and that number doesn't tie to what's on the ledger because somebody logged in and paid $50, we have tons of stories of people getting cases thrown out for that exact reason. So you have to restrict all means of payment at that point to ensure that when you get to the next step of the process, you're everything's above board and copacetic. The other thing that we've seen a lot of success with actually is like pre-agreed upon payment plans. So we have a feature in Revela where you can set up, payment plans for people with outstanding balances, and it functions effectively the same way as like, if you've ever owed money to like a hospital system where you can pre-schedule payments over a certain number of days or periods or months, right? And then it just automatically debits them as part of that thing. So they don't have to kind of log in and remember to do it. We send them a notice, 3 days in the day of, and then we just debit their account. And then they're technically in a, more positive payment trajectory when they sign and agree to that. And then, again, when you're going to eviction and you have a signed payment plan document, you're like, look, we tried, and it's hard again for the judge to throw out the case at that point. So that was really
Mhm.
in the weeds, but I hope that that's helpful.
No, that's amazing actually, because those demand letters do help. And I have a follow-up question for you because that brought up, you know, do you report it to the credit bureaus if those demand letters go unanswered?
We
No,
don't.
but you can use that to go to a collection agency and they can report it. Yeah.
Yeah, we've thought about doing that because on the tenant, positive payment side, we do report like when people pay on time to help them
Yeah.
build their right. It
Oh,
just seems
great.
bad to do it on the reverse side. And I just met you, Alexandra, but I'm pretty big-hearted and Midwestern, and I don't like to to kick people while they're down, so to speak. So, but yeah, you can
Yeah.
send them to a collections agency, and we'll probably never do negative credit reporting. Maybe we will on the mortgage servicing side. I don't know, but yeah.
Yeah, well, I think the carrot also works as an incentive. I'm glad you brought up credit reporting because I know, for example, in California, public housing is now requiring that you offer, actually all housing in starting in 2025 is now going to require California landlords to essentially provide that option to tenants. I don't think a lot of landlords know this, as you know, we have to be up to date on so many different things, but essentially you will have to provide this option to tenants and they can pay for it if they want it. But that credit reporting function of reporting those positive payments because, ultimately they are paying the biggest line item typically in their income that goes towards rent, and they're not getting any of that reported on their credit report. So to help them build credit, this is something now that landlords are supposed to be offering tenants. And like I said, you don't have to cover the cost, but you do have to offer it. And that's coming up, I want to say June or July of 2025, you have to have that implemented. So I'm glad to hear that you're already doing that. So it'd be easy to integrate.
I'll tell you this too. I mean, we did a lot of diligence on partners for that, and not all kind of credit reporting services are created equal, right?
Mm,
And if memory serves, the California law actually requires you to positively report to multiple credit bureaus, not just one. So if anyone here is talking to any of these providers, you have to ask that question in diligence. I mean, all of them know that, right? But not all of them do that. One that I'd say I'm really, really impressed with that I'd recommend, anyone here that is interested in, more of the mechanics of how all of that stuff works is this app called BoomPay. They're based down in Austin, but Rob Whiting, who's their CEO, is a really smart guy and lives, eats, sleeps, and breathes credit reporting for tenants. It's a very niche occupation, but I'd say he's the expert in that, and like that's who we prefer to work with on anything credit reporting related.
Great. Well, thanks for the recommendation. Even if you're not in California, though, I do think that the carrot works pretty well to incentivize tenants to grow their credit and build trust with their landlord. You are helping them out in some sense, right, by allowing them to do that. And, it can be a good strategy as well. So another question here, and I think this might be the last one. We'll see. Can you handle maintenance and manage apartments in smaller markets? Specifically, uh, will you manage properties in Mississippi?
We do have some properties in Mississippi, so
Okay.
very clear we're not a management company. We're a software for management companies or for owner operators. So I just want to make that distinction quickly. We do have actually we bifurcate maintenance, so we're a little bit unique in that. We've got a full work order ticketing system that allows you to assign vendors, track which of your vendors are doing which thing. If you've got internal employees, they can track time, upload photos, upload receipts. Actually, as part of our embedded banking solution, which I haven't really talked about because this was not supposed to be a salesy thing, so I tried to stay away from that as much as possible. But our embedded banking solution allows you to use Revela as both your accounting system of record and also your bank account. So you get debit cards, charge cards, all that stuff, and you can actually, use those cards at places like, Lowe's, wherever you're going to kind of spend money on maintenance, and those receipts tied back to the work orders automatically, which we think is pretty.
Mm,
The other side of maintenance we have is project management, which we really use more for, renovations, turns, something that has a budget and a timeline and multiple stakeholders and what we call like task dependencies, right? So for anybody that does a lot of heavy rehab stuff, you're never supposed to install carpet before you paint the walls, right? Because the likelihood that you drip paint all over the carpet is really high. So that's what that feature is really for, is like we have to do this before this before this. And this is how much money we've allocated for each of these steps. And this is when we think it's going to be done. And this is who's doing each of those things. We also have an inspections application, so you can load it up on your phone or do it through mobile web. Tenants can do inspections, vendors can do inspections, then internal employees can do inspections. Off of those inspections, you can actually create scopes of work for additional projects. And if you do have, SKU lists for vendors that you use, and SKU lists are basically just collections of, items that you buy over and over again. You can actually build those into your inspection and then cost out the at least the materials portion of the job sort of as you're doing the inspection to kind of eliminate a little bit of the double entry. So that's everything we have going on from a maintenance perspective.
Okay, I know you didn't want to make this salesy, but I am kind of excited about all these different features that Revela has. You're right, there's a lot of property management software out there, and I think, there's definitely quite a few things that I heard today that sound pretty unique. So this wasn't supposed to be part of the presentation, but do want to share my screen to Revela's website, revela.co. So I'm going to drop that in the chat. I'm also going to send it to you all tomorrow. Check it out, and there's no harm in clicking this big orange button to book a demo, to talk to the Revela team about the specific features that would be best for you. You don't need to use all of them, but it's really nice to have the option. And I think this kind of would give you guys a little bit more information of some of the details of exactly what Revela is capable of doing. So, highly recommend that. I'll send it in the email tomorrow as well. I do think that we may have gotten, let me see, Alexandra, we missed what you said about insuring or covering the damage loss when the tenant left. Well, we'll send you the recording so you can take a look at that since we are coming up here on the hour mark. And Natalia says this is a very professional and clean website, and I've already checked it and I like it very much. So that's nice feedback. Thank you. And Grant, thank you as well for taking the time to talk to our members and answer all their questions. A lot of excellent tips that I actually think were unique and not like always the same tips that we hear every year. So I'm really glad that you went over it. And I did see a link to the summary for this meeting. So thank you for doing that. I can also include that for everyone tomorrow. That kind of goes over some of the highlights of what we discussed if you don't want to rewatch the whole thing. But I'll also send you the slides and the recording, and that'll be coming probably tomorrow, by the end of the day, but I'll see what I can do to get it to you faster.
Well, Alexandra, thank you so much for the opportunity. Thanks to everyone that, decided to take time out of their day to come and listen to my shtick. I certainly appreciate it. And if we can be at all helpful, please feel free to reach out to us through the website, connect with me on LinkedIn if you want. I tend to post some fun things there sometimes. So if you want to do that, feel free. And yeah, we're here to help no matter what the problem is. So yeah, don't be strangers.
Okay, great. Well, take care, everyone, and happy holidays. We do have one more webinar left next week for the year, on asset protection. So I will send out that invite as well. Thank you, Grant, again. Everyone, take care. Bye.
You all. Bye bye.